Welcome back to Today Assets Report, the channel that keeps you ahead of the curve when the markets are moving fast and the stakes are high. I'm glad you're here today because we have an absolutely packed segment for you. We're going to be breaking down everything you need to know about XRP, the broader crypto market, what Jamie Dimon just said live on CNBC, the Bank of Japan's big blockchain move, and some really important on-chain data that could tell us exactly where XRP is heading next. There is a lot to unpack here, so buckle up because we are diving straight in. Markets are nervous right now, investors are unsure, and in moments like these, the data becomes more important than ever. So let's get into it together and make sure you walk away from this video properly informed and ready for whatever comes next in this space. Let's start with where XRP stands right now because the price action is telling a very interesting story. XRP is currently sitting around the $135 to $137 range, which is actually up a few percent from where we were just yesterday. But here's the thing. We are still well below those $2 plus highs we saw back in January. And that gap matters. The daily chart is showing a slow and steady grind lower since mid-February, and today's candles are trying, keyword trying, to reclaim that mid-130 zone. Multiple analysts are now framing price action inside what looks like a symmetric triangle or descending structure, with resistance sitting right around 140 and support holding near 127. That 127 level is absolutely critical right now. If we lose it, things could get uncomfortable very fast. And I know that's not what a lot of you want to hear, but this is a facts-first channel and we are going to give it to you straight every single time. Now, before anyone starts panicking, let's talk about something that is actually really encouraging. The demand for spot XRP ETFs is picking up in a serious way. Today, we saw $39.54 million in inflows. Yesterday, it was about $25 million. Last month, the total was only around $50 million for the entire month, and the month before that was just $15 million. So you can see that trajectory is climbing and climbing fast. That is a meaningful shift in institutional demand, and it's the kind of data point that doesn't get enough attention when everyone's focused on the short-term price swings. When big money starts flowing into spot ETF products, it signals that sophisticated investors are positioning themselves for a longer-term move. They're not in here trying to day trade. They are building positions, and that matters enormously for where XRP goes from here over the coming weeks and months. But here's where it gets really interesting, and this is something that I think a lot of people are either misreading or completely missing. XRP open interest has absolutely cratered. We're talking about a 70% drop, going from $660 million all the way down to $203 million in just 5 months. That is $557 million in leverage that has been completely wiped out. Now, I want you to really think about that number for a second. This is not new short positions being opened. This is not bears betting against XRP. What we are actually seeing here is liquidations, forced exits, and a full market reset. The over-leveraged longs got squeezed out, and now the slate is clean. And historically, and this is the part that should really get your attention, the last time open interest was this compressed on XRP. The asset formed a major bottom and then launched hard to the upside. The leverage is gone. Now we watch who steps back in. And speaking of sentiment signals, let's talk about the open interest-weighted funding rate because this is a metric that seasoned traders watch very closely, and it's been flashing some really telling signals. Analyst Chad has pointed out that XRP's OI-weighted funding rates have been mostly negative since January, and he's saying that negative sentiment is getting close to exhausting itself. Now, for anyone who's not familiar with what this means, let me break it down simply. In perpetual futures markets, a funding rate is a periodic payment between buyers and sellers designed to keep the contract price aligned with the actual spot price. When the funding rate is deeply negative for a sustained period of time, it tells you that the majority of active traders are positioned short, meaning they're betting on the price going lower. But here's the key insight. When that negative sentiment exhausts itself, the market tends to flip, and it can flip hard and fast. That reset could be closer than most people think right now. And if you needed one more signal that something significant is brewing with XRP, look no further than realized volatility. XRP's 30-day realized volatility just hit its highest level since March of last year, clocking in at 1.16 on the indicator. Now, volatility by itself isn't bullish or bearish. It's simply a measure of how aggressively price is moving. But here's what history tells us. Every single time XRP has seen a spike in realized volatility at this magnitude, a major price move has followed shortly after. The calm is officially over. The market is entering a new phase, and that phase tends to be defined by large, decisive moves in one direction. The question is, which direction? And that's exactly why those key levels we talked about earlier, 140 on the upside, 127 on the downside, are so incredibly important to watch right now in real time. Let's talk about those key levels one more time because I really want this to sink in for everyone watching. Right now, XRP is trading in a very sensitive zone. If the bulls can push and hold price above 140, things start looking significantly more optimistic. If we can get above 151 and hold it, analysts are modeling a move toward 176 or even 180. On the flip side, if we break below 127, there's a large cluster of previous buyers who start losing money at that level, and the open risk drops back toward $1. Yes, you heard that right, $1. Now, I get asked all the time, will XRP ever go below $1 again? And look, I always say the same thing. In crypto, you never truly know. The fundamentals are stronger than they've ever been, but the macro environment right now is throwing curveballs that nobody fully anticipated, and we have to respect the possibility even when we don't want to. Because here's the reality of what's happening in the global macro picture right now, and it's not pretty. South Korea's stock market just had one of its worst single days in history, losing somewhere between $270 and $280 billion in market cap in a single session. That is a staggering number. Japan dropped 6%. South Africa dropped 6%. Germany, Spain, and Italy all fell between 4 and 5%. The UK and France were down 3 to 4%. Even the Nasdaq 100 dropped 2%, along with China. Global stock markets are in panic mode right now, and the reason is rising oil prices tied directly to escalating U.S. military engagement in the Middle East. When uncertainty hits at this scale, risk assets sell off. It doesn't matter how strong the fundamentals are. Fear is a more powerful short-term force than logic, and right now, fear is driving the bus. And here's why rising oil prices are such a problem for every single one of us, not just traders. Think about it this way. Every product that gets shipped anywhere in this country, your groceries, your clothes, your electronics, travels on a truck. That truck burns fuel. When oil prices go up, fuel costs go up. When fuel costs go up, shipping costs go up. And when shipping costs go up, the price of literally everything at the store goes up. That's inflation. And here's the brutal irony of our current situation. We are trying to bring interest rates down. We are trying to stimulate economic growth. And at the very same time, rising oil prices are threatening to spike inflation back upward. If inflation rises, the Fed cannot cut rates. If the Fed cannot cut rates, the economic boom that so many people in this space are counting on to drive crypto prices higher gets delayed or derailed entirely. That's the risk on the table right now, and it is very real. Now, let's shift to something that is genuinely exciting and bullish because there is real, concrete progress happening behind the scenes that the mainstream media is almost completely ignoring. The DTCC, the Depository Trust and Clearing Corporation, which is the backbone of post-trade settlement in the United States, has officially put out a notice that Hidden Road, now operating under the Ripple Prime brand, went live on the NSCC directory on March 2, 2026. This is not speculation. This is not a rumor. This is an official DTCC notice. Ripple Prime is now connected to the back end of the DTCC and can actively settle transactions. David Schwartz himself has responded to posts about this, calling it important and noting that this integration has been in the works for quite some time, long before the acquisition was even fully finalized due to regulatory approvals that were still pending at the time. And David Schwartz's comments are important here because they give us real insight into how Ripple operates. He said, and I want to be clear about this, that he was hoping to find something public to link to but couldn't, and that he couldn't say much more beyond what was already out there. But what he did confirm is that this was not something that happened overnight. This has been in the pipeline for months, possibly years. And that is exactly how Ripple works. They build quietly, they lay the infrastructure, they secure the partnerships, and then when the regulatory environment catches up, everything goes live at once. We are watching that playbook execute in real time right now. The Hidden Road and DTCC integration is a massive step toward Ripple Prime, bridging the gap between traditional finance and decentralized finance at institutional scale. This is the kind of development that should be making front-page news. Now let's talk about the Bank of Japan, because this is another major development that is flying completely under the radar for most people. The Bank of Japan has officially launched a sandbox to test settling central bank current account deposits on a blockchain system. Governor Kazuo Ueda has stated that the experiment will explore interoperability with the Bank of Japan's existing settlement network and examine potential use cases. Now, Japan already has deep connections with Ripple. We have talked about those relationships extensively on this channel, and you have to ask yourself the natural question here. Is XRP going to play a role in what the Bank of Japan is building? Whether it's through a private ledger, a direct integration, or some kind of bridge mechanism, the idea that Ripple is somehow involved or at least on the radar is not crazy at all. In fact, given the existing relationships, it would be surprising if they weren't at least in the conversation. Now we have to talk about Jamie Dimon because his comments on CNBC this week have stirred up a lot of conversation across the crypto and traditional finance worlds. The JP Morgan Chase CEO came out and said he welcomes competition and innovation in blockchain technology, but he has a clear message for stablecoin issuers. If you are holding customer balances and paying interest, you are acting like a bank, and you should be regulated like one. He specifically said, and this is a direct quote, that a compromise could be for crypto companies to pay rewards on transactions, but not on balances, because the moment you start paying on balances, you are functionally operating as a bank. He then went on to list all the regulatory requirements that banks have to comply with: FDIC insurance, anti-money laundering rules, capital requirements, liquidity requirements, community lending obligations, essentially making the case that crypto companies are operating with a significant competitive advantage by not having to follow the same rules. Now look, I'm going to be honest with you here because I think a lot of people in this community are feeling the same way I am about Jamie Dimon's comments. Does anyone else feel like this is a little bit rich coming from the CEO of one of the largest banks on the planet? If JP Morgan truly wasn't scared of competition from crypto and stablecoins, why are they fighting this hard in the legislative process? Why are they pushing back on the Clarity Act? Why are they raising these issues now instead of during the Genius Act negotiations, which was actually the bill focused on stablecoins? The timing feels very deliberate, and at the same time, Lee S. acknowledged the reality. JP Morgan itself is one of the biggest users of blockchain technology. They have their own deposit coin. They are processing billions in real-time payments using blockchain rails. So they are not anti-crypto, they are anti-competition that doesn't play by their rules. Lee S. close out with some really important on-chain data that should genuinely excite anyone who is long on XRP. In the last 24 hours, over $1.4 billion worth of XRP has been moved on-chain. We're talking about transactions of 500 million, 300 million, and 200 million XRP, and Ripple is doing what they typically do after the monthly escrow unlock. They are locking the majority of those funds right back into escrow. Historically, Ripple has locked somewhere between 70 and 80% of the billion XRP that gets unlocked each month back into escrow almost immediately. This tells you they are not trying to flood the open market with supply. They are being disciplined and strategic about how XRP enters circulation. On top of that, we have 69 million RLUSD being sent to Gemini as part of the strategic partnership between Ripple, MasterCard, and Gemini to test blockchain-based settlement for credit card transactions. That is real utility, real volume, and real institutional momentum building right now. And it is all pointing toward the same inevitable conclusion that the Bitwise CEO talked about at Swell last year. Crypto is arriving to upgrade the financial system, and XRP is right at the center of it. Stay locked in, stay informed, and we will see you in the next one right here on Today Assets Report.